بسم الله الرحمن الرحيم الحمد لله وحده والصلاة والسلام على من لا نبي بعد أما بعد. Respected brothers and sisters, welcome to the National Zakat Foundation's program on Zakat on businesses. Inshallah, in this 1 hour, we'll be doing a tutorial on how to calculate Zakat on your business. So this is a unique event, a unique tutorial inshallah, where we'll be discussing the intricate rulings with regards to businesses. For example, a person who has a business from home, okay, he buys, imports, exports, buys and sells from Amazon or eBay, how would he go about calculating his zakah? Or let's take another example. A person who has a warehouse, daily has stock coming in and out, goods coming in, goods going out, trucks coming in, trucks going out. How would this person work out his zakah? Or there's a pharmacist, he owns a pharmacy, a chemist, so many different medication there. What would he do to work out his zakah? So in this 1 hour, inshallah, we'll be touching upon all these issues, and after the hour, most, if not all, will be comfortable with zakah on businesses. So on your screen, you can see our tutorial, our guide that we have. In front of me, I have my guide, zakah on businesses. So we'll be walking through this, inshallah, and hopefully by the end of today, you'll be experts on zakah on businesses. So if we start on the first page, what is zakah all about? What is the power of zakah? So as an introduction, zakah is not just a figure we punch in on our keyboard and pay. And sadly, that's what zakah has become for many of us. A figure, a payment, and that's all. Ramadan comes, we type it in and we make the payment. But zakah is more than that. The Messenger of Allah ﷺ told us that poverty can lead to disbelief. كَادَ الْفَقْرُ أَنْ يَكُونَ كُفْرًا. So zakah, we learn that zakah, if there's poverty can lead to disbelief. And Allah has given us zakah as a pillar to combat this poverty, to combat poverty. And zakah can save the iman of people. So one of the things about zakah is not just about poverty alleviation, but more than that. How does it tie with the iman of the society and community? So zakah uplifts the iman of a society and a community. On top of that, zakah is one of the fundamental pillars of Islam. We all know the famous hadith, Bunya al-Islam wala khams. Islam has been built upon 5 pillars. And zakah is one of the fundamental pillars. It's amongst the 5 pillars of Islam. So if we have all these pillars in our lives, that's the only time when our Islam can be uplifted and can manifest. If these pillars are absent, no matter how much we talk, no matter how many slogans we have out there, Islam will be weak. So brothers and sisters, zakah is fundamental in this. For salah, I always say this, for iman, we have iman, we've accepted Islam and iman, alhamdulillah. Every single day our iman is building. As we're tested, we have sabr and shukr. Salah, it's easy, you go to the masjid, you say Allahu Akbar and you stand behind the imam. Nothing else to do. Comes Ramadan, fasting is very easy. Just have an intention and you don't eat, you don't do anything forbidden. And your fasting is done. Hajj, very easy. You have your tour guides nowadays and hold you by the hand and take you around the Kaaba, make you do your tawaf. So all these are easy, but comes zakah. Where do I go? This is where the National Zakat Foundation comes in. Our goal, our objective, our purpose is to ensure every single person in the UK, and not only in the UK, the whole world inshallah, we want every single person out there to be able to pay the zakah as it should be paid. Every payer, every pound of zakah must be paid. And only then can we expect the mercy of Allah when we're fulfilling the commands of Allah. So this is the power of zakah. Then our guide mentions why zakah on business assets. This is established from the Quran and the Sunnah. Okay? Allah tells us, أَنْفِقُوا مِنْ طَيِّبَاتِ مَا كَسَبْتُمْ, that spend from the good that which you have acquired. Which refers to, the scholars mentioned in the Mufassirun, they mention it refers to zakah on business assets. And there's a hadith also narrated by Sayyidina Samura ibn Jundub radiallahu anhu. He mentions that the Messenger of Allah commanded us to give zakah on what we intended for transaction and trade. مَا نُعِدُّ لِلْبَيْءِ. So wherever we acquire to transact and trade, it was a command of the Messenger of Allah sallallahu alaihi wasallam that you pay zakat on that. So zakah on business has been established from the Quran and from the Sunnah. Moving on, just a few benefits. What is the benefits? If a person pays zakah on a business, what are the benefits? Nowadays, it's very common in a business to have many risk mitigation techniques. Insurance, you diversify your assets, you don't concentrate your assets in one pool. But Allah is telling us, the Sharia is telling us, the best way to mitigate yourself against risk is to fulfill the command of the one who controls everything, which is Allah. Everything happens with the will of Allah. If we fulfill His command, He'll make sure and He'll make everything around us go our way. If we don't fulfill His command, then how can we expect the mercy of Allah? You can only imagine and expect calamities and difficulties. So zakah is a divine risk mitigant. When we pay zakah, it purifies our wealth. That's why it comes in a hadith which is mentioned in our guide. مَا خَالَطَتِ الصَّدَقَةُ مَالًا إِلَّا أَحْلَكَتْهُ. Sayyidina Aisha Ta'ala, she mentions that zakah is never intermingled with wealth, except that the zakah, it destroys our wealth. So imagine a businessman, a businesswoman, somebody who has a business out there who's not paying zakah. The question is, how can there be true profit without zakah? Can there ever be profit without zakah in a business? Never. You may be earning on the balance sheet, you might have a positive result and outcome. There might be a margin there, profit margin, a high profit margin. But if there's no zakah in that business, that person has exposed himself to difficulties in this world, and moreover, difficulties in the hereafter. So brothers and sisters, zakah is the risk mitigant. It's the divine way to save our businesses and our lives in this world. Okay. Moving on, the next page, page 3. What are business assets according to zakat principles? So just like any field, okay, any science, okay, any area, any profession, there's terminologies. And the experts of that area will know the terminologies and what it means. Likewise, zakah is no different. Zakah has specific terminologies and meanings. What are business assets then, according to zakat principles? Business assets simply is everything purchased with the intention to sell. That's all. Whether it's purchased, any contract that takes place, it has to be a bilateral contract. So for example, I paid somebody to manufacture something for me, and at the same time I had an intention to sell that on. That'll become a business asset. It's not necessarily it has to be a sale. Okay? So any bilateral contract, a commutative contract, I acquire something in such a contract, and then at the same time I have an intention to sell. That would become a business asset. So simply two things: intention plus transaction. Intention plus transaction equals business asset. So if there's a transaction that takes place, I have an intention that I want to sell this on further, it'll become a business asset. This is just being technical, but in reality, all the shops that we have on the high streets and main streets, all of them, they buy stock to resell. Okay? And then another question arises, okay, what defines a business asset further? I mean, what are the characteristics of a business asset? The main principle is that it has to be productive in nature. Again, this is technicalities. Anything gained for the intention to sell will grow. Okay, you want it to grow in terms of its value. So it becomes a business asset. So those are the technicalities mentioned on page 3. It's good to read. Okay? But moving on, let's zoom into a business now. So we have a businessman here. His name is Brother Umar. Okay? He's a Brother Umar. He owns a business. What does he own? Let's have an example. What does he own? Which shop? Okay, we'll say, for example, he owns a takeaway. Okay, it's almost dinner time, so I'm thinking of food, right? So he owns a takeaway, and he sells good food there. Okay, let's analyze his business. Okay. In his business, what is he going to have? He'll have cash. Obviously, we're going to be walking in, buying some fish and chips, burgers. Okay, some pizzas maybe as well. Maybe there's a customer that comes and he can't make the payment today. So he says to him, I'll pay you tomorrow, brother. That's possible as well. Then he has everything which he has sold, the goods, the things that he's selling, the stock and inventory, okay? All these different things. Or he might have even given a loan to somebody. His friend might have come in, run into his business and said, I want some money to borrow. So such a person, Brother Umar, who has his a chippy, a fish and chip shop, for example, his takeaway, he'll have cash. Cash is zakatable. Okay, cash is always zakatable. Regardless of the currency, it's zakatable. That's the first box that we have on page 4. Then cash receivables. If you have given somebody a loan, like Brother Umar, he gave his friend a loan in his business, then that money which is outstanding, it's zakatable. Right? So just say Brother Umar gave his friend, on the 1st of Ramadan, he gave his friend £5,000 to borrow. Okay? And it's been 2 years, his friend hasn't paid him. And Brother Umar pays his zakah on the 15th of Ramadan every single year. Comes this 15th of Ramadan, zakah is obligatory on the amount which he gave as a loan, but he has an option. He doesn't have to pay right now if he doesn't want to, but what he can do is, he can pay and his zakat liability will be fulfilled. Another option he has is, wait until he receives the loan back from his friend, and then he'll pay his zakat. But in this scenario, he'll have to backtrack and pay for every single year if the loan was outstanding. Okay? So that's cash receivables. Number 3, trade receivables. His Brother Umar, he sold a portion of fish and chips. Okay? And 5-6 pounds were outstanding. Now, when he's working out his zakah, he'll have to take all those outstanding invoices and receipts and pay zakah on that also. And number 4, stock and inventory. So, all the stock that he has that he's selling there, his drinks in his shop, his food, everything is zakatable at that time. Okay? Now you're thinking, how does a person, a takeaway, work out zakah on food? Okay? Imagine how technical it can be. So, all the raw materials that he has there, the bags of potatoes, okay, his sauces which he's going to give on to others, his drinks, his other raw materials, his burgers, his packets, whatever else he uses to make his food, it'll all be zakatable. And obviously when it's cooked, it's turned into cash straight away. Okay, so comes his zakat anniversary, he's going to have cash and raw material and stock which is selling on that day, which he'll have to calculate. The next page, number 5, the non-zakatable assets. So we discussed zakatable assets. These are the 4 main zakatable assets in the business: is cash, receivables, trade receivables, and stock and inventory. One point I've mentioned in stock and inventory is, nowadays many brothers and sisters out there are selling apps, software. How do we treat that? Okay, so for example, you're a developer. You develop apps and you sell them. Okay, or you purchase apps from one place and you sell them on to another place. Okay, so if you are in a business where you're selling software and apps, that's your business. Zakah is also obligatory on those apps and software which you've acquired to resell. It'll become a business asset. So a person will value the app at what it's worth and pay zakat on that also. So now, page 5, non-zakatable assets. So not every asset is zakatable in a business. Some assets are zakatable and others are non-zakatable assets. For example, number 1 is service receivables. Service receivables refers to any service which is provided. For example, an accountant, a lawyer, a painter, okay, or a dry cleaner, any service that somebody provides to you. Okay, where you're not buying something tangible from them, you're being provided service. And if you have some receivables, somebody owes you money, you're a service provider, somebody owes you money. You're an accountant, you've done the accounts for your clients, but your clients haven't paid you. But it comes your zakat anniversary, and you have £5,000 outstanding. Zakat is not obligatory on those £5,000 which are outstanding. Okay. Number 2, prepaid expenses are also non-zakatable. So on a balance sheet, you normally see prepaid expenses. Okay, this is a sum which a person pays for something in advance. That is not zakatable either. Number 3, fixtures and fittings. So any belongings, any fixtures and fittings within the business, your hardware, your tables, your furniture, your till, your cash machine, or your shelving, whatever there is in the business which you're not selling, but it's supporting your sales. It's supporting your business. That is not zakatable either. Number 4, property, plant and equipment. Again, your building, your delivery trucks, everything which helps you and assists you in your business, but you're not selling, it is not zakatable. Number 5, intangible fixed assets, such as copyright, trademark, goodwill. Okay, such things are not zakatable either. These are fixed, more or less like fixed assets. When a person acquires goodwill or he pays for a copyright or trademark, he is not going to sell that. That's for him. Okay, that gives him value to his business, but he doesn't sell that. It's not a business asset. Remember, what was a business asset? A business asset was anything acquired to resell. The primary reason why you're acquiring that is to resell. And all these things we've discussed on page 5 are not acquired to resell. They are acquired to assist you in your business transactions and your business. So now we've understood why zakat is important, how it became obligatory and why it's obligatory. The benefits of zakat, we mentioned that zakat is the divine risk mitigant. Without zakat, there can never be profit for a business. Without zakat, there can never be profit for a business. This is a line and a sentence which we need to carve and etch into our minds and hearts. That without zakat, there can never be profit for a business. Okay. Then we mentioned zakatable assets. We've looked at some non-zakatable assets. Fine, we've understood all of this. But how do we go about valuating stock? Okay, I have so many different forms of stock in a business. How do I go about pricing them for zakat purposes? So we have approximately 4 or 5 different types of stock which we've mentioned in our guide. Number 1 on page 6 is dead stock. Okay, dead stock. What does dead stock refer to here in this discussion? It refers to stock which has depreciated in value and it's illiquid. Nobody's buying it. So hard to sell. But is it zakatable? Yes, it's still zakatable. It's still stock. It's still a business asset. If somebody walks into the shop, we will still sell the item. But how do we price this? Remember, it's all about pricing and valuating because zakat is due on the total value of business assets. So we need to have a value on the stock. So dead stock will be valued at what it's currently worth as dead stock. Okay, whatever you think you'll get for it at its current state, you can price it at that. Number 2 is undelivered stock. What we mean by undelivered stock is stock which you have ordered from a different country or anywhere from a different city. Or you might be even in your own city, but it hasn't come to you yet. It's not in your possession. That is also zakatable. How do we pay zakat on that and how do we evaluate that? You'll value it according to where it is at the moment. So for example, if I have ordered items from China, okay, I'm doing importing, exporting, I have goods coming from China, and I've purchased it, the agreement has gone through, they're still sitting in China in customs, it's about to come. I'll evaluate it according to what it's worth right now in China, add that to my total value and pay zakat on it. Okay. Number 3, work in process and raw materials. If somebody has a business where he manufactures goods, he takes orders, for example, he's a carpenter, or he's a manufacturer of beds, cupboards, okay, and other household goods. Such a person, at that current state, what is it worth? What's the market value of the item at that current state? He will use that and pay zakat on those goods. Number 4, damaged stock. You have stock, unfortunately it got damaged for whatever reason. Whatever you think at that time you'll get for it, you put that value. The objective, remember, is to put a value on every single item for sale in the shop. And that's what we're doing. So these are different items and stock that we have in a business. And number 5 is wholesale stock. Okay? If a businessman, a businesswoman, she sells or he sells stock in wholesale, then he can use a wholesale price to pay zakat. So these are 5 ways which we've discussed, and 5 different types of stock which we've discussed how to evaluate your stock. Number 7, so we've understood everything. Now let's look at 4 examples as case studies. You have a jeweler, a restaurant, a property development business, and groceries. Okay, so a jeweler, he has all this gold, right? Hundreds and thousands of pounds worth of gold in his business. He has to pay zakat on all his gold, his silver, any other form of jewelry. How will you evaluate that? Simple. Remember we mentioned your normal goods are valued at their retail price. Okay, All goods are valued at their retail price. Okay. However, if it's a different type of good, if it's a dead stock, undelivered stock, work in process, damaged stock, or wholesale stock, that's when we'll use different forms of valuation. So a jeweler will use his retail price to evaluate his stock. A restaurant, for example, has ingredients there, he has foodstuffs and drinks and other items. So he'll again look at his retail price. His ingredients, he has raw materials. For example, it's a chip shop. He has bags of potatoes there. How will he go about evaluating his stock? Okay. So if he can't get a retail price, it's very difficult, and he can't find a market price. Now, what is it currently worth? What he can do is his allowance for him to use a cost price. Okay. So if a business out there cannot find or get a figure for certain items, they can use a cost price as a last resort to put a value to that item. So a restaurant is a very good example of this. All the raw materials and ingredients that they have, they can use the cost price there to pay zakat on it. Number 3, if a person is a property developer, you buy property to resell, okay, and you do some additions to the house and then you sell it on further. Such a person, he'll evaluate the houses at the market value. Number 4, groceries. Fruits, vegetables and foodstuff should be valued at what they are currently worth. So a grocery, he will look at a shop. All the normal goods, he will use the retail price. But you have bananas, you have apples, you have pears, peaches, oranges. How do you evaluate that? Okay. Whatever the items are currently worth, he will evaluate that and pay zakat on that value. So now we've understood, we have a very good idea of assets in a business. Remember, when we mentioned zakatable assets, we mentioned your stock and inventory, cash receivables, and trade receivables. These were the 4 major zakatable assets in a business. That was your stock and inventory, okay? Your cash receivables, money you've given to somebody to loan and you're expecting it to be paid back. And number 4, trade receivables, items which you've sold and you have outstanding invoices. Then we mentioned assets or zakatable assets which are or non-zakatable assets. For example, service receivables, your fixtures and fittings, your property, plant and equipment, your intangible fixed assets, all of these are non-zakatable. Then we mentioned that we must evaluate our stock. How do we evaluate our stock? All normal stock that you have must be valued at its retail price. However, if the stock is different, for example, it's damaged, or it's dead stock, or it's wholesale stock, or it's work in process, or it's undelivered, these are rare scenarios which we discussed in our guide, and then we discussed some case studies. Moving on, so as you're all aware, how does zakah work? First, we have to table all our assets together and the value of our assets. Just like a balance sheet. We have all our assets first and the values. Thereafter, we can deduct our liabilities. So which liabilities are deductible and which are not deductible? That's what we're going to discuss right now on page 8. Okay. So the common deductible liabilities are, or we could say, the liabilities which are deductible from a business. Number 1, current liabilities. All your current liabilities, which means any incurred expense. If you purchase something and you owe somebody money, you can deduct that. Any expense which has been incurred, you can deduct that. And if it's to be settled in full within the 12 months, you can deduct that right now. Number 2, 12 months installments of long-term liabilities. You've purchased something, or you're in an agreement, okay, a long-term agreement with somebody. The 12 months that you owe, okay, the first lunar year, or the 12 lunar months that are coming, the forthcoming ones, you can deduct the installment payments. You cannot deduct more than that. Okay. Number 3, arrears. Anything that all arrears and overdue payments can be deducted from one's zakat calculation. Number 4, personal loans from family and friends. So if you've borrowed money from a family friend or anybody, that you can deduct that amount also, the entire amount. Even if the person has said to you, you can pay me after 2 years, it doesn't matter. The entire amount is deductible. The rule in Sharia regarding loans is demandable at any point. Okay. Loans are demandable at any point in time. Therefore, if you borrowed money from somebody, the entire amount is deductible at the current time when you're working out your zakat. And number 5, 12 months of capital repayments from bank loans. Okay? If a person, a business, for whatever reason, borrowed capital from a bank, then they can deduct 12 months of capital repayments only. Moving on, page 9, the non-deductible debts. What isn't deductible in a business? Which debts are not deductible? Number 1, future expenses and bills, okay, which refers to anything which has not incurred yet. It's a future expense. It's based on your usage. It's based on your consumption. For example, rent. Okay. I cannot deduct next month's rent or the month thereafter right now. Okay. It's a monthly thing. I cannot deduct it right now. Likewise, your gas bill, your electricity bill. Okay. That's a future payment which will come. It's a future expense. I've not incurred it yet. So next month's electricity bill, I cannot deduct right now. Number 2, non-current liabilities. So if a person is in a long-term agreement, and they're non-current liabilities, meaning he does not have to pay anything at all in the next 12 months, rather he has to pay after 2 years, 3 years. He's purchased something where he had 24 months credit, 36 months credit, and he's not paying right now. He's going to pay after 1-2 years. He cannot deduct that amount right now. And number 3, unlawful wealth. For whatever reason, if a Muslim unfortunately received unlawful wealth, knowingly that it's wrong, and he didn't istighfar and he repented to Allah, but he has this money with him, then he cannot deduct that money from his zakatable calculation. Rather, the entire amount has to be given in charity. The entire amount must be given in charity. So we don't give 2.5% of unlawful wealth, rather we give 100% of unlawful wealth. So that was your non-deductible debts. Okay? So unlawful wealth is never part of a calculation. It's never part of the zakat calculation, in other words. Unlawful wealth, the entire amount is given away. But we don't take a percentage from we don't add that onto our zakat calculation. So that was our debts that we discussed. So what are the common liabilities in a business? Page 10. Okay. The common liabilities in a business, they are the following. Okay. Outstanding invoices and trade creditors, number 1. Okay. This is common. You have outstanding invoices and trade creditors. For example, you owe somebody money. Okay. You've received a service or you purchased some goods. Okay. You received some service and you have purchased some goods. You can deduct that amount. Okay. So for those who are watching us, make sure you download the guide. Inshallah, we are discussing this guide right now. This is the Zakat on Businesses guide prepared by the National Zakat Foundation, and we're discussing common liabilities. Okay. Do download this guide, inshallah. It's taken 5 months to prepare this guide. 5 months with research for 5 months, consultation with a number of scholars, accountants, financial advisors, practitioners. So everybody viewing, do download this guide and share it amongst your contacts as well, inshallah. Number 2, utility bills. Okay, another common liability that we have is utility bills, which refers to your broadband, your telephone, electricity, gas, sewer, water, all these things. Okay, your utilities, you can deduct from, as we mentioned, whatever you've used, whatever is an incurred expense, whatever is not an incurred expense, rather it's a future payment. That cannot be deducted right now. Number 3, corporation tax, your VAT, your capital gains tax, your pay-as-you-earn, your PAYE. Okay, all these taxes are also deductible. So if I've charged the VAT, okay, and the VAT is with me, I've collected, I don't have to pay zakat on that amount. Okay, that is a deductible liability. The moment the sale takes place, the VAT is due to HMRC. I do not have to pay zakat on that amount. It can be deducted from the cash that I have and the total calculation. Number 4, bank loans. I owe the bank money. Okay, as we discussed earlier, you can deduct that as well. 12 months worth of repayments. Personal or private loans. If a person has borrowed money from a friend or from a family member, it's a personal loan that is taken, the entire amount can be deducted also. And finally, The non-deductible liabilities, which is common in the business, is interest payments. If a person, he owes interest to somebody, he owes interest, that cannot be deducted at all. As we mentioned earlier, that is not part of your zakat calculation. Moving on. So, we've discussed a number of things. We've discussed the business assets, we discussed liabilities. We also discussed how to value your stock. And what are we discussing today? We're discussing zakat on businesses. Brothers and sisters who have just tuned in, watching us now, we are discussing zakat on businesses, and this is a unique tutorial on guiding everybody on how to calculate zakat on your business. If you have any queries, the National Zakat Foundation are always available to answer your queries. You can contact us via email on zakatquery@nzf.org.uk. That's zakatquery@nzf.org.uk. Or if you want to talk to one of our experts, qualified experts in zakat, you can call us on 03333 123 123, inshallah. So easy, what a number.
It's the first time ever as well.
First time, right?
Yeah.
03333 123 123. A very easy, simple number.
This webcast is the first time ever as well.
MashaAllah. So this webcast as well is the first time that somebody is doing a zakat on a business webcast. Alhamdulillah. Right? As far as I'm aware, right? So how do we go about working out and valuating our stock? Okay, we've discussed which value we need to put, but how does a person practically go on his zakat anniversary and work out his zakat? As you're all aware, zakat works on an annual basis, yearly basis. So comes a person's zakat anniversary, on that day, he has to see what he owns, the cash that he owns, the goods that he owns, receivables owed to him, all these different assets. But how does a businessman, just think about this, try and picture this in your mind, how does a businessman who has a business, a shop, what does he do on his zakat anniversary? Does he have to go item by item, stock by stock, counting the value, adding it with a calculator? £2 plus £3 plus £5. Is that what he does? Okay. Or is there any other method? So alhamdulillah, the National Zakat Foundation, after months of research, we came with a number of methods which many scholars have agreed with, and many practitioners out there have also assisted us in this research. So number one is the stock count. I mean, this is the most basic. If a person has this very small business, he sells goods from home. For example, online, he sells on eBay and Amazon. He has 10-15 boxes of items at home. It's fairly easy for him to work out the value of those items by doing a stock count. So he'll just look, okay, this is worth this much, worth this much. He'll add it all up, and that'll be his value for his stock. Let's move on, let's expand. We have a shop which sells, it's a grocery. I imagine a grocery store that you've been to. Hundreds of items there. Is it practical, feasible, possible for him on his zakat anniversary to close up, lock up, and do a stock take and stock count? Very unlikely. Okay? Very unlikely. He has hundreds of goods there. He'll be there all day. Okay? So what we advise, if you can't do a stock count, number two, we say, have a personal up-to-date record. Have some kind of record. A person should be aware of his finances. You should be aware. This is a quality of a Muslim, being aware of your finances. What do you have? What do you owe? Your will. All these things, they all tie in together. So a Muslim should be very conscious and very observant of his finances. So number two is have a record, your own record. You know your cash flow. You know how much money is owed to you. So if you have such a record, for example, I met an accountant who has a record, his personal record on an Excel sheet. He knows all of his business on his Excel sheet. If you have such a record, a personal record, you may use that record and use that as zakat for your zakat calculation purposes. If that is not possible, for example, a person has a warehouse of goods, a person has 50 shops, 100 shops, or he owns a mega brand out there, huge corporation, a huge company, and he sells hundreds and thousands of items. What does he do? It's not possible for them to go item by item and counting the stock. Neither is it possible to have a personal record. So, as a measure to work out the zakat, scholars got together, and at the National Zakat Foundation, after consulting many, we came up with this method of using the balance sheet. Okay. So a person, a company may use the balance sheet. Now obviously it depends when a person gets the balance sheet. So you should use the balance sheet closest to your Zakat anniversary. So just say my Zakat anniversary is the 1st of Ramadan and I got my balance sheets in March, April. I'll use those balance sheets for now. But when a person does use his balance sheet to work out Zakat, we've discussed which assets are zakatable earlier. And we've also discussed which debts are deductible. So we'll use the same principles on his balance sheet. But then, there's 2 points for a balance sheet that are very important to keep in mind. Point number 1, consider and determine any obvious adjustments to his net zakatable assets on the actual zakat anniversary. If you know that I'm using my balance sheet, I receive my balance sheet in March, April. I'm using it today, in May. But I know I've received £50,000 worth of goods which wasn't accounted for in my balance sheet. And I know those goods are still there. I will obviously add that onto my balance sheet and my zakat calculation. And point 2 is, you apply the gross margin percentage to the value of stock on the balance sheet. Okay? What we mean by here and by this is, on the balance sheet, the value which is put for your stock and inventory, that is the cost price. And as you're aware, as we discussed earlier, zakat is paid on the retail price. So after discussing and consulting a number of accountants, many accountants and practitioners told us that the best way to determine an approximate which can be used to determine the retail price is by applying the gross margin percentage, which others call the markup percentage also. So it's a difference between the cost price and the retail price, the selling price. That we want to work out that difference, and we want to use that measure. So which we'll discuss inshallah on page 13. So page 12. Okay. So these are the methods to evaluate your stock. So a person, he can either do a stock count, meaning individually add up the value of all his stock. That is possible and feasible for a person who has stock at his house. Okay. Number 2, a person who has more stock, okay, not such a big company, but he has his own records and his records are accurate. He can use his records and he can get a net figure for his zakatable assets and his business assets in his business. And if that's not possible, we mentioned a person who has a big company, he can also, as a last resort, what he'll do is use his balance sheet. It's not possible for him to do a stock count, neither is it possible for him to keep a record. So for such a person, he will use his business, his balance sheet for his business. Now when it comes to paying zakat, what do you do? How does he go about calculating zakat on a business? So number 1, he'll evaluate all the stock in his business. Okay, so he'll use the methods we discussed and he will evaluate all the stock. He'll get a figure. Thereafter, he'll add up the value. Step 2 is he'll add up the value of cash, stock, okay, cash and trade receivables in the business. Add it all up together. And remember, you pay zakat for your business at the same time you pay zakat on your personal finance. So your personal life and your business life are merged together for your zakat. Number 3, deduct any deductible liabilities as mentioned in the liability section. This will give you a net figure. Okay? So once we've tabled and added up all our assets, we'll add up all our liabilities, we'll deduct our liabilities from our assets. We're left with a net figure. And step 4, pay 2.5% of the net figure which you have calculated in step 3. And that's your zakat done. That's it. As easy as that. It's not complicated, it's not technical, honestly. All it requires a bit of effort for education, that's all. And alhamdulillah, that's why you're here for today in our Zakat for Businesses tutorial, live from the National Zakat Foundation. And inshallah, if you have any queries on this, you can always give us a call on 033 33 123 123. Or alternatively, if you wanted to send us an email, you can email us on zakat query, that's ZAKAT query @nzf.org.uk. Alhamdulillah, we have a number of zakat experts at your service and at your disposal, with whom you can consult confidentially, inshallah. So we discussed the balance sheet. Okay, we discussed that on a balance sheet you have to apply something called the gross margin percentage. What is that all about? Let's see. Okay, so if we go on to page 13, we mentioned that on a balance sheet, the value for your stock and inventory reflects the cost price. And as we mentioned earlier, zakat is paid on the retail price. That's where there's a dilemma. How do we go about? We want to use the balance sheet to pay zakat, but the balance sheet is not giving us the correct information for zakat. It's giving us a cost price of goods and not the retail price. So a number of accountants and experts have told us this formula, where a person can use a proxy and an estimate to get a rough idea of what the retail price of the goods were, okay, and are. So which we're using is a gross margin percentage. So step one, how do you work this out then? Look up the net sales and cost of goods sold in the income statement found in the company's accounts. These two terms you need to look at, which are found in the income statement. And net sales and cost of goods sold. Remember, the purpose of all of this is we want to see what is the retail price of your goods in stock. Okay? Because the balance sheet, if a company which has thousands of items, it's not possible and feasible for them to do a stock count. They cannot go and count every single item. So what do? They look at the balance sheet to work out the zakat. But the problem with the balance sheet is it gives you the cost price and not the retail price. So that hence we're using this measure to work out an accurate figure to add to the balance sheet value. So for example, if your balance sheet says £100,000 for your stock and inventory, that reflects your cost price, not your retail price. So once we do this formula or these steps, we will have a figure which you can apply to the balance sheet value, the stock and inventory value, and get a retail price, inshallah. So step one, we look up net sales and cost of goods sold on the income statement. Step two, minus the cost of goods sold from your net sales. So what we will do is minus the cost of goods sold from net sales. So this will give you a gross profit figure. So that's step two. So an example which we mentioned in the book, let's assume that a company has net sales of £50,000 and its cost of goods sold is £40,000. Okay? So net sales is 50,000, cost of goods is 40,000. This means its gross profit is £10,000. That's his gross profit. So the cost of goods was 40,000. His net sales was 50,000. That means he sold his goods and made a markup of £10,000. Step 3, calculate the percentage of gross profit in relation to the net sales. So if £10,000 is the gross profit, is 20% of £50,000 here. Okay? Therefore, the gross profit margin percentage is 20%. So what we've done in essence is we've looked at the previous balance sheet and we've analyzed what was the gross margin percentage. Okay? What was the gross margin percentage? Meaning, what was the difference between the cost price and the sale price? And in this example, it was 20%. So what a person will do is, if he's using a balance sheet to work out his zakat, he'll take this 20% from his previous balance sheet or his income statement and apply it on the value of stock and inventory on the balance sheet. So for example, in this example we mentioned in the book, if it's 20% and his stock and inventory is worth £100,000, he'll apply 20% of £100,000. 20% of 100,000 is £20,000. So he will add £20,000 to his stock and inventory value to get an idea of the retail price of his goods. And that's how we will evaluate his stock and inventory on his balance sheet. If you have any queries on this, remember, give us a call on 033 123 123. And alternatively, you can call us on or you can email us on zakatquery@nzf.org.uk. That's zakatquery@nzf.org.uk. Finishing off, so we've discussed today in this tutorial the importance of zakat in business. We discussed the different assets that are zakatable in the business. We discussed the non-zakatable assets in a business. Likewise, we addressed the liabilities and the non-deductible liabilities in a business. And we also looked at how a businessman, a businesswoman would go around and would calculate and evaluate the stock that they have in a business. And then we touched upon how to use a balance sheet on calculating a zakat for a business. Now some FAQs, very common FAQs, always good to have them at hand. Number one, when should zakat be paid? Very obvious, as soon as possible. It's an immediate obligation. If zakat is obligatory upon you today, you have to pay zakat today. You shouldn't delay. If there is a genuine reason for delay, that's an excuse and a person is overlooked. The zakat should be paid as soon as it's due. The second question, can zakat be paid in kind by giving some of my business assets? Yes, according to the Hanafi school, zakat can be paid in kind. Other schools permit it, but not so straightforward. So if you adhere to a different school of law, then always consult your scholars and check up. Okay, that is it permissible? Is it lawful for me to do such a thing? In other words, can a businessman give stock as zakat? So there is permission according to the Hanafi school. Number three, can zakat be prepaid in advance? So can a person pay zakat in advance? A person pays zakat in Muharram, but comes the month of Ramadan, he wants to pay zakat in advance. Yes, it's permissible, it's totally fine to pay zakat in advance, but what a person must do is, comes Muharram, when he pays zakat, he must do a calculation and see if he has covered his zakat liability. Number four, can zakat be paid as direct debits in installments? Yes, zakat can be paid as direct debits in installments. Actually, it's very good to do so. You are purifying your wealth on a monthly basis, and so the benefits will always be there, inshallah. Finishing off, we have on page 15, we have some case studies which are very good to look at. It put everything up together that we've been discussing. So here's a business. Here we have a case study of a business. This business has assets. Okay, it's fixed assets of property, plant and equipment valued at £300,000 and goodwill valued at £200,000. Remember, we discussed this earlier. Are these assets zakatable? No, they are not zakatable assets. Hence, non-zakatable. Zakat treatment is they're not zakatable. Current assets, stock and inventory, are they zakatable? Yes, they are. Trade receivables, yes. Cash at the bank, yes, they're zakatable also. Petty cash lying around here and there, it's also zakatable. Prepaid expenses, they're not zakatable. It's money which you have already paid. Add that all up, it's 500 and £1,000. Okay, the total of that. Thereafter, liabilities. Creditors, amounts falling due within 1 year. What we're looking at. Okay, current liabilities. Trade and other payables is deductible. Loans and other borrowings are also deductible. Corporation tax is deductible. Your PAYE and Social Security is deductible. VAT is deductible. Interest is non-deductible. You add that all up, equals £260,000. Then what do? We deduct £260,000 from the above total zakatable assets figure. That leaves us with net zakatable assets of £241,000 in this business. 2.5% of that is £6,025, and that's his zakat. So a person who has such a business, his zakat would be £6,025, considering all his different assets. That's how a calculation is done. In the back of this guide, the last couple of pages, what we've discussed is on page 16, because businesses are of different legal structures. For example, it might be a sole proprietor, a sole owner, a sole trader. It may be a business partnership. It can be a limited company. It can be a LLP, a franchise. It can be a co-op. So the principle for this is very easy, very simple. Is you pay zakat according to your share and what you own. Whatever you own, that's what you pay zakat upon, right? So if you're in a partnership, you own 50% of the business, you will pay zakat on 50% of the business, and you can deduct 50% of the liabilities. If you are sole owner, you'll pay zakat on 100%. Likewise, you look at your percentage ownership in all the different business legal structures. Page 17, okay, the importance of intention. This is discussed just to clarify certain scenarios. For example, what if a person, he buys an item and he buys it for his personal use, he doesn't want to sell, but comes 1 year later and he changes his mind. Now he wants to sell the item. For example, you bought a laptop for your personal use, but now you want to sell that. Is that zakatable? The answer is no. No, it's not zakatable. Remember, we have to consider, so to become a business asset, there has to be two things. Transaction plus intention. Transaction plus intention. At the time you're purchasing the item, you have to have an intention to resell. Whereas this person in this scenario, when he purchased his laptop, his intention was personal use, not for resale. Therefore, the item is not zakatable. So number one is clear intention to resell. If a person, he buys something with a clear intention to resell, like all businessmen do, all the assets are zakatable. Number two, clear intention for personal use. I buy an item, a product, for my personal use. Okay. That is not zakatable. Even if I change my mind later on. 1 year later, I change my mind, and now I put it in the market and I put it for sale. Even then, I will not treat it as a zakatable asset. It will not be zakatable. Number three, no clear intention. I buy something, but I don't know why I bought it. Okay. Will I sell it or do I keep it for personal use? I'm not sure. The item is not a zakatable asset either. Number four, a conditional intention. I buy something for personal use, but if somebody gives me a good offer, then I'll sell. I buy something for personal use. I bought a laptop. I bought it for myself, but my intention is, if anybody offers me a good price for it, I'll sell it. That is also not zakatable. Okay. Number five, clear intention to resell in the future, but lease in the interim. Okay. This refers to properties. If a person has bought a property to resell, but what he does is he puts it for rent in the meanwhile, while it's in the market, it will be zakatable also. These are the different scenarios of intention and how it impacts your business asset. And finally, on the last page, page 19, we've discussed the differences between zakat and tax, which is very important. Many people we take zakat to be a tax. We treat zakat as a tax. And that shouldn't be the attitude with zakat. Remember, zakat is an obligation. It's an ibadah. It's a worship of Allah. When you pay zakah, we are being rewarded. Allah's mercy is coming down upon us. When you pay tax, there's no reward for Allah. Okay? It's not something which is divine. It's a payment and obligation you have to make to the state. But zakah is different. It's a worship, it's an ibadah. And hence, zakat cannot be treated or regarded as another tax on wealth. The nature, objectives, and philosophy of zakat is different to that of tax. A Muslim should embrace zakat as a command of Allah. A Muslim should embrace zakat as a command of Allah. We should love zakah. That's the difference. Nobody, if you ask anybody, do you like tax? Do you like paying income tax? Nobody likes it. That's why we're always trying to find legal ways to reduce our tax liabilities. But zakah, a Muslim should love paying zakah. That's the difference between tax and zakah. Tax is unfortunately disliked by many, but zakah should be loved by all. Zakat should be loved by all. Zakat is worship, zakat is mercy, zakat is blessing, zakat is purification, zakat is all the good things that you can think of. There is no harm in zakah. There is no destruction in zakah. Zakah is only a blessing for us. It's only a blessing for our wealth and our health and everything. So zakah, we are supposed to love zakah like we love all the other forms of worship. We love our salah, we love iman, we love hajj, we love fasting for the sake of Allah. Likewise, we love zakah. We're parting our wealth, but by Allah, this wealth will come back to us. You will see with your own eyes, when a person pays zakah, the benefits of the zakah will come back to you one way or the other. It's not necessarily that money comes back to you, but you'll reap the benefits of the zakah one way or the other. It will be soothing and cooling for you in this world and surely in the hereafter. So you can read yourselves the difference between zakat and tax. Nicely, we've put a table out there for you which shows you the differences between zakat and tax. What we're going to do, inshallah, we're ending here. Remember, this was a tutorial for zakat and businesses. We discussed how to calculate zakat on a business. And remember, any questions you have, you know the number 03333 123 123. That is the number for your zakat queries and for all your zakat issues. 03333 123 123. The email for any zakat related query, zakatquery@nzf.org.uk. Alhamdulillah, this program was by the National Zakat Foundation. You're all aware the National Zakat Foundation offers services for both payers and recipients. We're serving payers and recipients nationwide. So this is the organization, alhamdulillah, with all the latest research on zakat. Go on our website, nzf.org.uk. Go on zakatguide.co.uk. We have many products available out there for you zakat payers. We have the generic zakat guide, a beautiful guide which has been prepared. It's colorful as well, and it's alhamdulillah, very interactive, very simple. It's very simple. Download those guides on zakatguide.co.uk. We have zakat on pension guide as well. So if you go on zakatguide.co.uk /pension, you'll be able to download our zakat guide on pensions. That also took 5 months of research. We have the zakat business guide, which can be downloaded also online. And likewise, we have another product called Zakat Guide. Zakat Guide. Many brothers and sisters out there, unfortunately, for whatever reason, miss paying zakat. So we prepared a guide called Zakat. It is a website called misszakat.com. If you visit our website, misszakat.com, you'll find the Zakat Guide you can download and read, inshallah. Alhamdulillah, jazakallah khairan for being with us today in this tutorial, inshallah. And we hope to serve you in the future as well, inshallah. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.